Hello and welcome to this session in which we would look at one topic from chapter 7, and this is the special journals in accounting. So I'm going to go over those special journals: the sales journal, the purchases journal, the cash receipts journal, the cash disbursement journal, and the general journal that we should be familiar with at this point. So basically, rather than having everything in the general journal, we're going to have special journals, and those are 1, 2, 3, 4 special journal, and the 5th one is the general journal. So let's go ahead and see what goes on each journal. Okay, so let's start starting with the sales journal. What goes on the sales journal? I'm going to write it down: sales on credit. So when you sell to someone on credit, what does that mean? It means you debited account receivable, you credited sales. This is what we mean by sales on credit. Then you debit cost of goods sold and you credit inventory. So this is sales on credit. Generally, that's the general entry. So rather than going through this transaction every time you make a sale, 1 time, 2 times, 3 times, 4 times, there's another way, shorter, faster way to record the transaction without going through the long 4 account journal entry. So rather than going through the 4 accounts, notice what the sales journal would look like. They will have a date. The date is February 2nd. We sold to Jason Henry. Once again, what goes on the sales journal? Sales on credit. Notice, not sales with cash, only sales on credit. Notice we sold to Jason Henry, invoice number 307, $450 worth of goods. How did I know this? Because notice, debit account receivable, credit sales. And remember, we debit account receivable, we credit sales for $450, $450. So it's in one, both are in one column, 450. Then the cost of the goods sold and the inventory is 315. Then we debit cost of goods sold 315, then we credit inventory 315. So notice how we, rather than doing this transaction in the general journal, now we basically, it's a one line. We have the name of the customer, the invoice number, so on and so forth. And notice we sold something to Albert Company. We sold to Moore. We sold to Roth. We sold to Henry. We sold to Frank Booth. So notice we sold to Albert. So notice we processed 1, 2, 3, 4, 5, 6, 7. 7 transactions right in the special journal all at once, rather than debiting account receivable, crediting sales, debiting cost of goods sold, crediting inventory. And this is the total. And this is the total. Now, remember, each client, Jason Henry, will have their own account receivable sub-ledger account. So notice Henry, Jason Henry, oops, this is Albert. This is Albert Company. This is not Jason Henry. So this is, notice this is the Albert Company. The Albert Company will have what's called a sub-ledger. So this is what the sub-ledger is, a subsidiary ledger, sub-ledger. It's something you need to know. Sub-ledger. Sub-ledger means keeping track of Albert Company accounts separately. So notice we debited $500 and the balance is $500. Then on February the 28th, which is another date, which is, it doesn't, so this is February the 7th transaction, February the 7th and February the 7th for Albert Company. Now on February the 28th, we made another sale. Actually, it's right here, February the 28th. We made another sale. Therefore, we updated the subledger. Now, Albert Company in total owe us $750. So this is the subledger. The subledger for Frank, which is we sold Frank on the 25th. We update their subledger. So each customer will have their own subledger. Okay? And when we add up all the subledgers, which is the subledgers are here, when we add up all the subledgers, they should add up to the general ledger. So the general ledger account receivable, this is the general ledger, this is the overall account, the general ledger account receivable, 2150. Notice we debit this account only once, 2150, and the balance is 2150. And the inventory, the same thing. The balance was 15,700. The balance was that much. Then we credited the balance 1,500. Now the balance is 14,200. And same thing, we update the sales general ledger and the cost of goods sold general ledger. So those are the general ledgers, and those are the sub ledger. So account receivable, each client will have an account receivable sub ledger to keep track of their account. So this is how the sales ledger works. Okay. Now, governmental agencies often require sellers to collect sales tax from customer and periodically to send these taxes to the appropriate government. Now, if you are collecting sales tax, you could add a column that says sales taxes payable. For example, here we are collecting $3 of sales tax. So you could add more columns to the sales journal. But remember, what goes on the sales journal? Sales on credit. Okay. If a company has few sales returns, they may be recorded in the general journal. So if the company experiences few sales returns and allowances, they will not have a column in the special journal. Just once a return happens, debit sales returns and allowances, credit receivable, and we do this in the general journal. There is no need if this doesn't happen on a regular basis. Okay? A company with many sales returns and allowances may use a sales returns and allowances journal. So if they have a lot of them on a regular basis, they could have their own journal, special journal that's called sales returns and allowances. Okay, let's just take a look at this entry. Sold merchandise, $400 to J. Dale for $600. So the cost is $400. We sold them at $600. Okay, terms 2/10 and 30, invoice 704, sold merchandise to R. Lim. Okay, so basically in the sales journal, both goes in the sales journal because they are we're selling on credit, July 7th, July 12th, debit sales, debit account receivable, credit sales, debit cost of goods sold, credit inventory. Okay. All right, now, what happened if we sell something and we received cash? Well, that's different. Remember, sales journal only sales on credit, okay? What happened is when we sell and we receive cash, or anytime we receive cash, cash receipts, including sales, goes on the on the cash receipts journal. So we have a cash receipts journal. So this is the second special journal. Okay, this is the second one. The first one was sales on account, which was the sales journal. Now we're going to be discussing the cash receipts journal. What goes on the cash receipts journal? Every time you receive cash. Why would you receive cash? You could receive cash, some common sources, cash received from credit customers. You sold someone on account, they send you the cash. And what happened under this transaction? You debit cash, credit account receivable. Cash from sales. You sell, and they pay you cash immediately. You debit cash, you credit sales. And cash from other sources, like what? You borrowed money. You debit cash, credit notes payable. So those are all sources of cash. So notice what's common between those entries. You are debiting cash, debiting cash, debiting cash, debiting cash, and crediting something else. So the cash receipt journal, you will have a column for, let's go back there. A column, notice a column for debit cash, and other columns to credit something else, whatever you are doing. Okay, so the cash receipt journal the entry will always have a debit to cash. For example, here on February 7th, we made a cash sale for $4,450. Notice we debited cash, this is DR debit, and we credited sales, and we debited cost of goods sold, and we credited inventory. Notice this is a sale, but why it does not go on the sales journal? Because it's a cash sale. So we sold something and we received the cash immediately. Jason Henry, invoice on 2/2. Well, let's go back here. I think we sold something to Jason Henry on 2/2. Actually, Jason Henry, doesn't have to be this invoice. So basically, I was thinking that we have the account receivable for this, but it doesn't matter. Notice Jason Henry, invoice that's dated February 2nd. They paid us cash, $441. We debited cash, credited account receivable $450. It seems they paid within the discount period, gave them a discount for $9. Okay? Then we made another cash sale. Cash sales goes on the cash receipt journal. Then Albert paid their bill. Then we borrowed money from the bank. Debit cash, credit other accounts, which is notes payable. So notice, so what goes on the cash receipt journals? Every time we receive cash, every time the company receives cash, they have everything on the cash receipt journal. By the end of the month or the end of the week or the end of the day, whatever period they want to, they will total all the cash, which is for this month, they total $19,770. And what they do, they will update the cash account. They will debit the cash account. Okay. Then they would also update each customer separately. For example, Albert made a payment. Albert company on the 17th made a payment. We will credit their account for $500. Now their balance down to zero. Notice. Same thing, Frank made the payment on February the 25th. Do we have it here? We don't. Who made the payment? Jason Henry made the payment on the 12th. Jason Henry made a payment, so we credited their receivable, and now their balance is zero as of February the 12th. So we will update each account separately. Now also we update each account separately for those. When we borrowed the money, the 750, when we borrowed the 750, we update the notes payable, the general ledger. So we still update each individual general ledger. So this what goes on the cash receipt journal every time we receive cash. And obviously you have to make sure all your debits equal to your credits. Of course, they will be equal to each other. And let's just take a look at a cash receipts journal. All what you need to know is you need to know what they are. Now, if you're studying audit later, you would need to know how to look into those a little bit further, but that's all what you need. So the company borrowed $5,000 cash by signing a note. The entry is debit cash, credit note. Now, what you do is you have a column debit cash under cash debit, and you credit other account, which is the note. Seeming the owner contributed $1,000 cash. Well, for the second entry, you debit cash, credit capital. Well, we debit cash, credit other account, which is capital. The company sold merchandise for $100, costing $100 to Mullen for $400. Well, debit cash, $400, credit sales, $400, debit cost of goods sold, $100, credit inventory, $100. In the cash receipt journal, you have $400 here, $400 here, and $100 here, all one line, which is debit to cash, credit to sales, debit to cost of goods sold, and credit to inventory. Okay. And the 29, the company received $950 cash from Chen in payment, so you debit what they paid within the discount period. So you debit cash $950, credit Chen account receivable, and pay within the discount period of $50. So this is an example of a cash receipt journal. So we need to know what goes on the cash receipt journal when we receive cash. All right. Now, let's talk about the purchases journal. So what goes on the purchases journal? Let me tell you, very easy. Anytime you make a purchase on account, and what do you buy on account? You buy inventory, debit inventory, credit AP. You buy supplies, debit supplies, credit AP. You buy other things. You could buy a lot of things on account, okay? Again, same thing. You will always have an accounts payable column because accounts payable will always be involved in the transaction. So notice here, February 3rd, we purchased something from Horning Supply Company, invoice dated 2/2, $350. Credit, account receivable $350. Actually, we bought inventory and we bought supplies. Okay, so we debited inventory, debited supplies, and we credited AP. Then we bought from Ace Manufacturing Company. Same thing. Inventory, $200 under accounts payable, $200 under inventory. Notice we bought inventory from these suppliers. Now, just like the account receivable, all accounts payable or all our suppliers, they will have an account payable subledger. So all our suppliers, Ace, Horning, ITT Company, Smith Company, this company as well, all of them, they will have a subledger, and we'll keep track of each of their accounts separately. Okay, now also we will update the inventory account, we'll update the office supplies, we'll update the store supplies, and we update the overall accounts payable. So this is the general ledger accounts payable. So if you add all the subledger of the accounts payable, they will add up to the general ledger account payable. Okay, so this is the purchases journal. Okay, here's 3 examples. We purchased 1,000 of merchandise from Kim, debit merchandise inventory, credit AP. We purchased 200 of supplies from Chai Company, debit supplies, credit AP. AP, not AR, AP. Purchased 600 of office supplies, again, debit supplies, credit AP for this amount. Now what we need to do, we need to show it to you and how it's recorded in the purchase journal, because we bought everything on credit. They all involve increasing the accounts payable, and here's how it works. Okay. The cash disbursement journal, the 4th special journal. Well, the cash disbursement journal include what? Include every time we spend cash, we pay cash. So it will always involve credit to cash and debit to something else. Now, why would you pay cash? Well, you buy inventory with cash. So you debit inventory, credit cash. You pay your salaries, you pay your employees with cash, you debit salaries expense, you credit cash. You pay your suppliers, you pay, there's so many other reasons why you would pay cash. You'll pay your accounts payable, debit accounts payable, credit cash. So notice all these entries involve a credit to cash. So the cash disbursement journal, every entry that goes there should involve a credit to cash, because that's the purpose of the journal, is to keep track of all of your cash disbursement. And notice here, we bought inventory from L&N Railroads for $15 and we paid them cash, credit cash, debit inventory. We bought from East Sales Company $25 worth of inventory, same thing. Now remember, all these customers, all these suppliers, they would also have a subledger, okay? For example, Ace Manufacturing. Let's look at Ace Manufacturing. We paid them $196 for a bill for $200 because we owe them $200. We paid within the discount period. So notice what's going to happen. We're going to go to Ace and debit Ace $200 to make the balance go down to 0. So once you make a payment, you update the balance. Okay. Same thing. Now you paid Jeffrey Hale salaries expenses $250. You credit cash, debit other account, which is salaries expense, okay? And you will update your salaries expense general ledger. So this is what a cash disbursement journal would look like. Now, obviously, you will add up the total. You'll have to make sure you update your cash general ledger. You have to update your inventory ledger. Okay, you have to update, obviously, your accounts payable, so on and so forth. But the point is to know what goes on the cash disbursement journal, okay? So, and anything else that does not go on the following. So the first journal, we said the sales journal. That's one of the special journal. Then we talked about the purchases journal. So what goes on the sales journal? Sales on credit. What goes on the purchases journal? Purchases on credit. Now then we talked about the cash receipts and cash disbursement. And this will always involve a credit to cash, and this will always, the cash receipts always involve a debit to cash, and the cash disbursement will always involve a credit to cash. Okay? Now, what about other entries that doesn't fit any of those categories? Like what? Purchases of plant asset by a note. So you bought a plant asset, so you debited the asset. You bought a plant asset, but you bought it on account. You credit notes payable. So this entry, let's assume you bought a land. You bought a land for $100,000. Well, you used a loan. The loan doesn't fit anywhere here. It's not a sales journal entry. It's not a purchase journal entry. It's not a cash disbursement. It's not a cash receipt. It doesn't fit anything. So where does it go? It goes under the general journal. Receipt of a notes receivable. Somebody gave you a notes receivable, which we'll see that later on and in another chapter, for sale because you made a sale. Well, a note is not an accounts receivable. Or you finance an account receivable with a note. Okay, $10,000. It doesn't fit anywhere. Also, we talked about purchase returns and sales returns and allowances. If the company does not have a lot of those, they will record them in the general journal. What else could go in the general journal that doesn't fit under those 4 special journals? Remember, adjusting entries that you learned about in prior chapter, adjusting entries, closing entries, because they don't fit any of those special 4 journals. So this is basically the 5 journals that you need to kind of know what they are. That's basically it. And know what a subledger is. You know, a subledger is the specific account for the client. For example, either for a customer or for a supplier. For example, if we have a customer, it'll be a subledger. The subledger will be an account receivable subledger. If it's a supplier, it will be an accounts payable subledger. Okay? And that's basically mainly what you need to know from chapter 7, beside the 5 controls at the beginning of the chapters. That's all you need to focus on. You could read the chapter, but those are the selected information that I want you to cover. The 5 journals and the 5 principles of control for an accounting information system. If you have any questions, any comments, by all means, email me or see me in class.